Real Estate Market Update, February 17th, 2026. Disclaimer: this content is for informational purposes only and is not intended to provide legal, medical, financial, or official advice. News is news and should not be construed as legal, financial, or medical advice. Do not treat the following anecdotal stories as advice. They are shared solely to illustrate market trends and individual experiences based on publicly available information. Overview of the U.S. housing market in early 2026. As we move into the second half of February 2026, the U.S. real estate market continues to show signs of stabilization following a volatile 2025. Inventory levels are rising, home prices are moderating, and mortgage rates remain in a relatively steady range below 7%, offering some relief to buyers amid ongoing affordability challenges. However, homebuilder sentiment remains subdued due to high land and construction costs, as reported by the National Association of Home Builders, NAB. This sentiment index deteriorated in February, reflecting persistent headwinds like elevated material prices and regulatory hurdles. Reuters.com. Nationally, existing home sales for January 2026 fell 8.4% month-over-month to a seasonally adjusted annual rate of 3.91 million units, marking the lowest level in over 2 years and falling short of economist expectations around 4.16 to 4.18 million. Year-over-year, sales were down 4.4%, influenced by tight inventory, winter weather disruptions, and lingering affordability issues. Despite the dip, the median sales price rose 0.9% year-over-year to $396,800, continuing a 31-month streak of increases and hitting a record high for January at StockMom. Inventory remains a key factor in this rebalancing. Unsold inventory dipped slightly by 0.8% month-over-month to 1.22 million units, but was up 3.4% year-over-year, equating to a 3.7-month supply at the current sales pace. Still below the balanced 6-month threshold, but improving. Active listings nationally are up 7.5 to 10.5% year-over-year, reaching approximately 696,000 homes, with new listings increasing by 9.7%. Homes are lingering on the market about 8 days longer than last year, with around 34% experiencing price cuts, giving buyers more leverage. At StockMom at Randy Realtor NH1. Mortgage rates and affordability trends. Mortgage rates have shown persistent stability near 3-year lows, with the average 30-year fixed rate climbing slightly to 6.16% as of February 17, 2026. Other sources report rates dipping to around 6.1%, boosting affordability and pushing homeownership rates to 65.7%, the highest of 2025. The 15-year fixed rate sits at an attractive 5.36%, according to Zillow data. Forecasts suggest 30-year rates will hover between 5.9% and 6.3% for the rest of 2026, influenced by the Federal Reserve's late 2025 rate cuts and steady policy in early 2026.wsj.com. Plus 2 more. Affordability is improving for the first time in years, with mortgage applications rising and pending sales ticking up. Experts predict 3 to 14% more existing home sales in 2026 as the lock-in effect from low pre-2022 rates eases. Home price growth has slowed to about 0.9% year-over-year nationally, with median listings down 2.4% in some areas. Projections for 2026 indicate modest 1 to 3% growth, aligning with or below wage increases, at Randy Realtor NH1. However, challenges persist. In several southern markets, over 10% of mortgaged homes are now underwater, signaling potential risks in overheated regions. Gen Z continues to delay homeownership due to high costs and economic uncertainty, as highlighted by real estate experts at VladTheInflatorFoxBusiness.com. Regional and sector-specific insights. Regionally, the market is shifting toward buyers in areas like Colorado, where closed sales in the Denver metro fell 14.6% despite rising listings, leading to more negotiation power. In California, Developers are focusing on flexible indoor-outdoor spaces for senior housing, spurred by legislative pushes to increase production. Local transactions, such as the $37 million REO multifamily portfolio sale in central Tucson, underscore ongoing activity in commercial and multifamily sectors. ColoradoBiz.com. Plus two more. Commercial real estate credit markets are rebounding, though questions about safety linger amid AI disruptions in services companies. Real estate stocks like Blackstone, Welltower, and Prologis are highlighted for high trading volume, with market caps in the billions. HSFCramer.com. Plus two more. Internationally, parallels exist. In Canada, January 2026 sales were worse than 2025's per performance, with fewer sales and more inventory. In the UK, house prices stood still in February, but marked the strongest start since 2020, with improved affordability. At Ramor Gajagi at David N. Stocks 1. Anecdotal stories from the market. While not advice, these stories highlight real-world experiences. In New Hampshire, realtor Randy Miller notes a great rebalancing, where buyers are negotiating successfully due to longer market times and price cuts. One client reportedly secured a $535,000 median-priced home after a 5% reduction, leveraging the slowing growth. At Randy Realtor NH1. In Dallas, housing analyst Amy Nixon shares concerns about headwinds like record January job losses and crypto volatility affecting down payments. A young buyer she referenced delayed purchasing after losing funds in digital assets, opting to wait for further rate drops. At Texas Runner DFW. In a positive turn, a first-time buyer in Bakersfield, California, benefited from dipped rates to 6.1%, closing on a home amid rising homeownership rates. These narratives underscore the market shift, but emphasize individual trajectories and